/CH/N. Good evening, everyone, and welcome to today's market analysis report. Today's global risk asset markets experienced a volatile session characterized by structural divergence. We saw a general sell-off and washout, yet within U.S. tech stocks, there were localized signs of a bullish reversal, a scenario we estimate with a 70% probability. The primary flow of capital ultimately gravitated towards certain U.S. tech leaders, particularly those in the AI PC space exemplified by NVIDIA, as well as safe haven commodities like crude oil. Conversely, we observed clear signs of capital withdrawal from China's A-share market and the cryptocurrency sector. Let's begin our review with the Asian markets, which saw intense internal divergence. The Nikkei index broke above 67,000 points for the first time, closing up 0.9%, largely buoyed by a 14% surge in SoftBank's share price. South Korea's Kospi index soared 3.68%, hitting a new historical high, driven by a significant increase in semiconductor exports. Hong Kong's Hang Seng index rose 0.86%, with the Hang Seng Tech index up 1.65%. However, China's A-shares bucked the trend, closing lower. The Shanghai Composite Index fell 0.3%, the Shenzhen Component Index dropped 1.51%, the Chinext Index declined 2.15%, and notably, the Star Market 50 Index plummeted a full 5%. Previously crowded AI hardware sectors like semiconductors, CPO, and PCB saw some of the steepest declines. This indicates robust risk appetite and continuous capital inflow into AI and semiconductors in Japan, Korea, and Hong Kong, while the A-share market experienced structural divergence, with earlier clustered tech stocks beginning to unwind. Capital retreated from high-flying AI hardware names, and the 5% drop in the Star Market 50 serves as a clear signal of a short-term inflection point. The European market started cautiously today, delivering a rather subdued and lackluster performance. The Pan-European Stoxx 600 index fell 0.2%, while Germany's DAX index and France's CAC 40 index remained largely flat. The UK's FTSE 100 index declined 0.3%. Escalating tensions in the Middle East and U.S. airstrikes in Iran contributed to geopolitical uncertainties, dampening investor confidence. Despite some better-than-expected manufacturing PMI data for May in certain regions, the overall market remained cautious against a backdrop of rising energy prices and increasing bond yields. Turning to the U.S. markets, the three major indices closed with modest gains. The Nasdaq rose 0.42% to 27,086.81, the S&P 500 gained 0.26% to 7,599.96, and the Dow Jones edged up 0.09% to 51,078.88. However, individual stock performance was extremely divergent. NVIDIA surged 5.59%, while crypto-related assets like IBIT fell 2.76%, MSTR dropped 5.77%, Tesla declined 4.25%, and the ARKK Innovation ETF was down 1.05%. Pre-market, U.S. futures had shown declines, with Nasdaq futures down 0.34%, influenced by Middle East geopolitical tensions and rising oil prices. But during the trading day, NVIDIA's announcement of its entry into the PC chip market and collaboration with Microsoft on the N1X processor fueled a rally in AI-related tech stocks, propelling the broader indices higher. Yet, the VIX Volatility Index climbed 4.63% to 16.05, and WTI crude oil surged 2.89% to $92.33. These typical risk-off signals were largely overlooked by the market, especially in the U.S., suggesting that optimism surrounding the AI tech theme is currently overriding geopolitical risks. From a capital flow perspective, today's strongest directions were U.S. AI PC concepts and semiconductor stocks, with NVIDIA's significant gain being a prime example. Crude oil and the energy sector also performed strongly due to heightened geopolitical tensions. The weakest areas were China's A-share tech stocks, clearly signaled by the 5% plunge in the Star Market 50 index, and the cryptocurrency market, which also showed weakness. Looking ahead, we believe the US AI PC concept has the potential to form a new, continuous market theme. NVIDIA's new product launch carries strategic significance and could usher in a new era of intelligent computing for PCs, injecting fresh momentum into the broader AI narrative. Conversely, the adjustment in A-share tech stocks signals a potential phase end for the previous clustered theme, requiring time for digestion and restructuring in the short term. The US dollar index edged up 0.12% to 99.18 today, and the offshore RMB saw a slight depreciation of 0.03% to 6.7636. The 10-year US Treasury yield rose 0.49% to 4.47%. These macroeconomic factors will continue to exert pressure on global risk assets, particularly emerging markets in Asia. Tomorrow, A-shares are expected to open lower and experience volatility as they digest today's tech stock plummet and potential negative sentiment from U.S. futures. Meanwhile, US AI PC concept stocks could see continued strength in the short term, though gains might moderate. Key data to watch will be the U.S. non-farm payrolls report for May, expected later this week, and further developments in the Middle East geopolitical situation. These will be critical in determining the short-term direction of the dollar and the trajectory of global risk assets. In summary, market pricing power has become highly concentrated in specific sectors, rather than being driven by broader macroeconomic liquidity. The adjustment in A-share tech stocks serves as a cautionary signal for global AI-related sectors.